Hi guys, let's talk about trade receivable today. I have prepared a question. Let's go to it together. I will check the require first, what they need us to do. Okay, now A. Prepare the journal entries that QL Surprise should record for the approved transactions with what trading. Narration are not required. Okay, now I know that I need to prepare a journal entry. Then from my mind, I should know what is the journal entry format. Okay, now journal entry is look like this format. Title, journal. Now please remember when they are required journal entry, right? It only have the 4 column, which is the date, particular, debit, and credit. Alright. Okay, now let's check what happened on 16th of May. Alright. Now QL Surprise show goods on credit to what trading at a list price of 10,500 and give a 10% trade discount. Then the goods cost 5,100 if the invoice is paid within 14 days. There is a 5% cash discount. Okay, now please look it for more detail. Actually here got 2 questions. Question, the first part before the full stop here. Do you see the full stop here? That means the first step is talk about the sold goods to what trading. Okay, now second part that talk about the good cost. That means this is linked to your cost of sales and inventory. But they provide another condition is if that person, that means if their what trading is paid within 14 days, what trading will get another 5% cash discount. Now 16th of May, so good. That means have linked to your sales revenue and your trade receivable. Okay, now from here write down 16th of May, trade receivable, who is that? What trading and your sale revenue. Now sale revenue, the condition here is 10% trade discount. That's why you using the 10,500 times 0.9. That means which is the trade receivable only pay you 9,450 instead of 10,500 here. Alright. Now second point here is we talk about the good cost. I mentioned that earlier, linked to your cost of sales and inventory, which is here. So that means your debit cost of sales 5,001 and then credit your inventory 5,001 also. Alright, but it doesn't involve the 5% yet because it's within 14 days. Then we will involve it later. Alright, this is for the 16th of May. Now next question, 20th of May. What trading returns 500 list price of goods to QL Surprise? The goods cost 300. Now same thing here, mention about 2 points again. One is a return, the other one is a good cost 300 here. So now what is our double entry here? Now the firstly, sale returns 500 must times 0.9 because the previously you have give them offer 10% trade discount. That's why your sale return here also need to times 0.9. That's why you return to them only 450 instead of 500 here. Do you get it? That's why our double entry is debit your sale return, credit your trade receivable. Now come to the next one, the same thing. They have mentioned about the good cost 300 here. That's why your debit your inventory, credit your cost of sales, because you receive the good from your credit customer, and then you put your goods back to the inventory. That's why you need to debit your inventory, credit your cost of sales. Alright, come to the next. 31st of May, QL Supply received a check from What Trading for the amount owed from the 16th of May transaction. That means What have made you a payment by check, which is from the 16th of May. So first in mind, how much the What Trading will give you. Okay, you need to calculate based on like this. 9450 minus 450. By right is What Trading need to pay you 9450. But unfortunately halfway What return something to you. Then you need to minus out. That's why at the end What issue a check to you, which is 9,000. Wherever you get the money check, right, then you put into your bank. That's why you put under the debit column here. That's why debit your cash and bank, credit your trade receivable, What Trading. Alright, because What no more owe you money from 16th of May. Next, 2nd of July, QL Supplies was informed by the bank that the check received from What Trading on 31st May was dishonest. That means dishonest, that means there is many reasons behind. The more important thing is the check returns. That means we call it a bounce check. That means the bank would not accept the check. That's why return to QL Supply. So what is the transaction? Alright, so trade receivable for in this situation, that means trade receivable still owe you the money, right? That's why you put the trade receivable What Trading back to the debit column there, and then cash and bank you should put under the credit column, because the bank reject the check, and then the money should out from the bank now. That's why you put under the credit column here. Alright, this one straightforward. Alright, come to the next. 5th of July, What Trading issue another check to QL Supplies for the amount owed from the 16th of May transaction. Alright, then What realized that bounce check, then What issue another check again to QL Supply. So what is the transaction? Cash and bank debit, then trade receivable credit. It's reversed from the 2nd of July. Okay, part A done. Prepare the journal entry to adjust the allowance for impairments of trade receivables as at 31st December 2022 based on the following information. Again, they are required to do the journal entry, but following the information below given. Point number 1. The allowance for impairment of trade receivables as at 1st January 2022 was 4850. That means this is considered 1st January is the balance 4850. Now, second point is QL Supply did not write off any debts during 2022. That is a good news. We no need bother about this. The trade receivables balance as at 31st December 2022 was 85,000. Then QL Supplies maintained an allowance for impairment of trade receivable based on 6% of the trade receivable balance. Now the 6%, you have to get the value from 85,000 there. Okay? Then note, narration are not required. Okay, we solve it one by one. For this question, normally I will encourage prepare the allowance for impairment of trade receivable account first. From there, be easy to solve it, the question. Or those that never mentioned need to prepare the allowance account, but just in case we have overlooked something, I will prepare the allowance account first. Now, the hints given us already, 1st January, balance brought out how much? 4850, which is given. And also, they have give us the hints here at the end. The ending is 85,000 trade receivable, but allowance for impairment trade receivable 6%. That's why I have to get the 6% from the 85,000. That's why 85,000 times 0.06, I will get 5,001. So at the end, I will get 5,001, right? So the easy way is I need to do the backward, then I will get my answer there. Alright, that means using the 5,100 minus 4850, I will get the 250. Alright, so now I will get my journal entry already. I credit my allowance, debit my impairment loss. So I debit my impairment loss, credit my allowance, 250, then I solve the question there already. Alright, of course, if you're quite familiar the allowance account, you no need to do this part, you can skip it, straightforward come to here. But this is just my advice. This need to take a few minutes, but you can see the whole picture here and very clear. Right, I just substitute here, then I can settle my question already. Alright, next, part C. Prepare an extract of statement of financial position of QL Surprise as 31st December 2022. Okay, then the format is like this. Title, what trading? Statement of financial position as 31st December 2022, but must bracket mention that extract. Okay, extract that means that this is a certain only parts, not for the full set account. Okay, now that means you have put the assets. Now trade receivable is under the current assets, and then come to the next one, your trade receivable, and then less your allowance for impairment of trade receivable, and then total net trade receivable. This is the format. Then we fill in the blank. Now trade receivable given come to the end 31st December 2022, right? This is the one given, question given just now, just fill in the blank. Then how much for your allowance at the end? 5,001. Where you get it? I just copy from what I have prepared just now under the allowance account. Then after that, copy and paste here, trade receivable minus your allowance equal your net trade receivable. That's it. Alright, I hope after you're watching this video, it will improve your journal entry and the concept of allowance for impairment of trade receivable. Okay, thank you and bye.